And joining us with a closer look on what's currently playing itself out on the market scene at midday is Viv Govender from Rand Swiss Offshore. Thank you so much for your time, Viv. Let's actually start off with that negative sentiment that we are seeing in the markets right now on the JSE and also in the European markets as we are waiting for those US markets to open, even though we did come out with, China saying that they're setting their target for 2024 growth at 5%.
Yes, I think the Chinese announcement is a bit disappointing. The market's looking at it in that point of view.
Okay.
Look, I mean, I think the Chinese approach at the moment is basically, just pumping more cash into the system, use some government interventions to try and keep things going, and they'll keep on going at the target rate that they want to. Unfortunately, that doesn't really work long term. You can't just will yourself to grow at 5%. You've got to put into place the mechanisms and the fundamentals that allow you to grow at 5% or whatever the rate would be. And I think the Chinese is not willing at the moment to do the kind of things that are required to get to that point. You've seen Xi Jinping, after consolidating his power, intervening in the economy in ways that have been quite negative, not just for individual stocks, but the overall economy. And I think that's what the market's waiting to see, some kind of change in the approach of the government in order to have a longer term sustainable growth rate.
It's always interesting to see how markets react to China's growth figures and also growth targets, because, I mean, right here in South Africa, we would love to have that kind of growth target set by the government. Viv, lots of company news that came out of the JSE today. Let's actually start off with MultiChoice, and we are seeing that share up at the moment, almost 4%. Canal Plus coming in and upping its offer price from 105 to 125. Investors liking this one?
Yeah, look, but I mean, the problem with this particular thing is the fact that if you look at MultiChoice's, share price over the last little while, what you'll find is that, you go back about a year or so, we're not talking about an age ago, just a year ago. Basically, if you're looking at a share price that was sitting at about 147, on March 6, 2023. At 147. So, even when the deal was basically announced here, the share price was close to like 80. And so it looks very, or 75 rather, and looks very good in comparison to, the 125 to 75. But just the 1 year price is like, 150 almost. So I think the market may have been wanting to see such a higher, price come through. And hopefully maybe for MultiChoice, for Canal Plus, this particular sweetening of the deal would be attractive enough to, shareholders.
All right. Well, let's take a look at ShopRite, also coming out with numbers today. It did have interim earnings out and, of course, reporting market share gains, further uninterrupted market share gains, also an increase of 14.6% in its sales from its core business. Are these the kind of numbers that markets are looking for from ShopRite?
Yeah, but I mean, we've got kind of used to these ShopRite spectacular, numbers here. If you look at, just the comparisons out there in the marketplace, obviously it's doing better than a Pick and Pay. It's doing better than, a variety of other, companies out there in the space because it's taken away market share. And it's also been more innovative. I mean, talk about the stuff that they're doing with regards to, the 60/60 delivery service and so on, which apparently is growing at about almost 70% a year on year, which is obviously a nice growth rate. That being said, it's great to be the number one in any sector, but in South Africa, unfortunately, due to some of the issues the consumer is having, it's not really translating into the kind of growth rate we want to see in the share price for a company that's doing this well. For the last 5 years, ShopRite is under 50% in total return, which is obviously compounding at less than 10% annually, which isn't great for a market leader like this.
Viv, let's move on to private education. Cure coming out with its numbers as well today for the full year. And actually quite surprising because, I mean, I would have thought that they were well guided. Revenue increase of 14.6%, but of course that not filtering through to the bottom line as they dealt with an impairment charge. And I am seeing that share price slumping about 4%. And I would have thought that the markets had already baked in those numbers after their trading update a few weeks ago.
Yeah, look, I mean, they are looking at adding new learners. They are, trying to basically increase the tuition fees after the setback of that was COVID. And so they are, making, efforts in order to be a more profitable company. And in the longer term, I do have a hope for because, unfortunately in South Africa, there's there's nothing more reliable at the moment than betting on government failure. And this basically company is looking to bet on the idea that parents, if given the possible choice, will go for the private sector as opposed to the public sector just because of the quality difference. Again, like with ShopRite, like with a couple of companies like Nedbank we talk about, it's the fact that the underlying economy is so weak. Great business model, great ideas, but you need to have the underlying economy be a bit stronger in order for people to afford these kind of inverted commas luxuries.
Well, even though the underlying economy is quite subdued, the banking stocks seem to still be outperforming there. Nedbank coming out with its year-end results, revenue and associate income growth of 12%. Also did have the benefit of net interest income over there increasing 14%. Even headline earnings growing by double digits there. We did see the share price climbing 4%. What do you make of what Nedbank has turned out in this period?
Well, it's quite good in terms of the performance, especially like as you mentioned, in this underlying, economy. 11% rise in profits, headline earnings growing to 15.7 billion from a year earlier. These are all excellent numbers coming through. That being said, obviously, if you look at the improvement in terms of, earnings, part of it is built on the fact that high interest rates are helping out with the super marginal high interest rates, but it also has a secondary effect where it actually hurts your customers' ability to pay back. As and then if you look at basically bad loans, credit loss ratios, it was basically up from where it was last year, and this is obviously beyond the target range. I think you mentioned that earlier in your segment here, and this is slightly better than it was half a year ago. But it's still showing that consumers are under pressure, and though in the short term it's good to have high interest rates, the longer term, if people are unable to pay the loans back, it becomes a bigger problem for the bank than anything else.
All right. Now, Viv, before we get to your stock picker, let's check in on what has found favor with some of your industry peers.
AVI, they released half-year results this morning. Headline earnings per share up by 17.4%, which is very strong. Revenue was up only 7.1%, so they became more efficient. They're a food manufacturer. They've got very strong brand names, Five Roses, Baker's Biscuits. And if interest rates do come down over the course of this year, we should see more discretionary spending from the consumer. And the same applies on the clothing side, where they've got Green Cross and Spitz, for example. And with lower interest rates, the clothing side, which is more upper end, should also do quite well. The only difficult part is I&J, which is a fishing business. They had poor catch rates, which were lower than expected. But the fishing business is very cyclical, and AVI could potentially look at selling I&J given the right price. So there is that cyclical component, but AVI is fairly defensive in the sense that they've got very strong brand names.
It's international. It's Pearson International Publishing Company.
Oh yes, Pearson. Yeah.
Scholarly books, Financial Times. Interesting is and this was a stock pick a while ago from me, is the way they're using large language models applicable to their own in-house research, which is not accessible to an outside company. So unlike ChatGPT, where you might ask something and get nonsense, with Pearson, if you are prescribed to Pearson, whether it be a scholar or an outside, their large language model uses their research to give you an answer, so you don't get gunk. It's a huge competitive advantage as far as I'm concerned, and they are the biggest player in publishing. Great results, and you actually saw that part of their business coming through. It's going to change their income model.
I'm going for a global player, Yum Brands, tonight. I think if you just look at the way that the business is positioned, it operates in a segment where people, in a tough economic environment, people don't necessarily hold back on quick and easy fast food solutions, which is obviously where this business is well positioned. It's got geographical exposure across the globe, and hopefully we do start to see this turnaround in China, where they've actually got some decent exposure, and we start to see an uptick in some spend in that space. So in terms of the portfolio of assets, the space it operates in, where we are in the interest rate cycle, I think it does look interesting. It's not fundamentally demanding, and I think it's a nice place to hide in a market that's been driven so much by your Magnificent Seven and your big tech players. And I think this looks quite interesting from a fundamental perspective at this point. And hopefully some leveraged earnings as we see better interest rate environments.
Very interesting stock picks there, Viv. AVI, Yum Brands, and Pearson, the publisher. Let's start off with AVI. The company did come out with, I think it was results, not a trading statement. I think it was results, yes. Sometime either this week or last week, had good revenue growth, even headline earnings per share. And actually quite interesting that even with the dark spot that is INJ, the company still manages to perform well. What do you make of AVI?
Yeah, look, I mean, one point I want to mention is I always like trying to point this on. If you talk about some of these companies that, often talk about, an unusual cycle in terms of weather or climate and so on, with the fishing that's happening right now at ING, or some of the food producers that talk about weather and rain and so on. But yes, historically, these are unusual periods and they come and they go. But I always have to point out the fact that we are living in an era of climate change. And that means that what was unusual, say, a decade or two ago is going to be the norm in the next couple of decades, you know what I mean? And you never can quite predict just what's going to happen there, whether or not it is actually, just a small blip in the performance because of, temporary conditions, or this is a real trend change that you're going to be dealing with for the next several decades. So, yeah, that's the one kind of just point I'd like to mention when it comes to these food companies.
All right. Well, let's take a look at Yum Brands since we are on the subject of foods, owner of KFC, Pizza Hut, and the like. I mean, even just, locally, we have seen these restaurant stocks doing quite well, your Spurs, your famous brands. What about Yum Brand? What do you make of their prospects in this environment?
Yeah, look, as was mentioned, the operations in China are very important to them. And obviously, with the stuff that we see happening in China with regards to difficulties, with regards to the economy, that might be something that has a longer-term effect on, or a serious effect on the company. You must understand, of course, what is, we know in South Africa, what is basically a cheap fast food brand in like the US, for instance. It's not so cheap in terms of places like China or in South Africa as well. People, some place in the world, you go to KFC because it's the cheapest thing around. Some place in the world, you treat yourself to KFC because it's a more expensive or a better, seen as more of a premium product just because of your income level and so on. So it obviously does matter in terms of that. And so we do see a bit of a downturn in the economy. It might be, having more of a negative impact than you would expect.
All right. Well, let's go into publishing, Pearson, and actually quite an interesting point that Rikus made there, in terms of their pillar of the large language models that's basically kind of competing with ChatGPT.
Yeah, look, I mean, the thing is that there's, I would put up the Reddit example as the kind of cap out there. If you look at Reddit, and I think Reddit probably has a database that's probably one of the more premium databases out there. And they basically are charging Google around about $60 million a year, $60 million a year for that database, in order to train their models and so on. So I would put that probably close to the high end of what you could expect to get for the kind of data involved here. Now, whether or not, a publisher could create its own LLM in order to, get some kind of service out of there, I mean, that is possible. I mean, Bloomberg does that effectively. That's what Bloomberg's whole model is. It basically gets together a whole bunch of data and kind of gives you a nice way to analyze it. So yeah, it's possible, but you've got to execute it properly. If they're able to do this correctly and avoid some of the issues like a Gemini is having with regards to bias and so on, it could be a very, very valuable prospect for them.
All right. Well, let's get to your stock pick for today, Viv. What will it be?
It's a company called ASML, and it's part of what's called the granolas. I don't know if you've heard of this term.
Yeah.
It's basically the big companies of Europe. As like the FANGs were the tech companies, the Magnificent Seven, or these acronyms. Now the new one's called granolas. The A in granola, or the first A in granola, is basically ASML, which is a chip manufacturer. I think that it's a chip machine manufacturer. So it makes the machines that manufacture the computer chips. And if you look at the share price increase in things like AMD or NVIDIA and so on, understand that they don't have a monopoly in what they produce. They basically are just producing the best that they can. And NVIDIA has a huge uptick because it's the best in the market here. But you downstream, just one step up, there is a company with a monopoly, and that's ASML. And I think that is the company that, if you're looking at investing in the chip sector, the first one you buy is ASML, and then look at the other ones that you're looking at, like NVIDIA's, AMD's, and so on.
All right. Well, thank you so much for your time and for your insights today, Viv. Really appreciate it. That was your midday market update with Viv Govender from Rand Swiss Offshore.